We have so many issues facing us as we kiss that three-day weekend goodbye and head into September, what's known as one of the choppiest and, well, let's call it what it is, the worst month. Every month of September since 1950, the Dow has fallen. So what are the golden areas that not only will protect you from the coming volatility, which is, by the way, here already with volatility up 29% today alone, but more importantly, that gets you perhaps turning away from this platter of disaster that we've been facing? Let's bring in J.P. Morgan Asset Management Chief Global Strategist David Kelly. From North Korea, David, to hurricanes, to the debt ceiling that's looming, and so much more. What are you saying is the best way to stomach, because we've been talking about retching at the moment for the markets, but to stomach what's going on here as it pertains to our portfolios?
Well, the two things. I think people need to, first of all, calm down a little bit about the U.S. situation, but then also look around the world. I mean, on the U.S., there is a big difference between human tragedy and economic disaster. These hurricanes have obviously are scaring people, and they're causing a lot of misery. The DACA issue is obviously causing more political turmoil, and there's a huge amount on Congress's plate. But we will get through these issues, and overall, natural disasters tend to actually cause more economic growth as we try and repair, no matter how miserable people are made by them. But, put that to one side. I don't think there's a reason to panic in the U.S., but there is an opportunity overseas. I mean, if you look at the numbers that came out last week on global PMI numbers, Purchasing Manager Indices on the manufacturing sector, for the world economy overall, the number was the best number we've seen since May of 2011. The world economy is actually passing by the U.S. in terms of growth. I think a lot of Americans have been so focused on U.S. investments that are not taking advantage of opportunities overseas, and there are a lot of opportunities overseas.
David, great point. You just said the world economy. Well, that gets split up to more than 100 countries. Is there any region in particular where you would have never guessed that it would have done well this year, but it really has, and you still feel there's more room to run?
Well, actually, we did kind of guess what would do well, but it's taking a while to get the message out. We thought that Europe would do very well. Europe is really, everybody's hated Europe for a long time, but it's in the early innings of a long recovery. It's picking up speed. We've got, I think a lot less political turmoil than people worried about. So Europe is one area, but also emerging markets. I mean, we always hear about the worst ones in places like Venezuela and so forth. But if you look at emerging markets in general, they are improving here, and valuations are just cheaper. I mean, people have been underpaying for European stocks and emerging market stocks for some time. So there's more room to move up, I think, in both of those areas.
Volatility, we are seeing it today, and if we look at it, people do question, do you just sit tight on a day like this and ride the waves of both the bad days and then the good days? And you should come out, if you've got that balanced portfolio with some international exposure, you should come out better in the end.
Yeah, that's right. I mean, I think it's so important to get the portfolio right and not try to worry about the timing too much. People always tend to jump out when they feel scared and get back in when they feel comfortable. But of course, that's just another way of buying high and selling low. When I look at all the things that are worrying markets today, none of them actually, I believe, are really going to negatively impact corporate profits over the next few years in the end of the day. So I think people should sit tight and just think about, the question they should ask themselves is, the average big American company, the average big global company, how are they going to do over the next 10 years? Are any of the things that we're worried about today really going to negatively impact that profitability? I think the answer is probably no.